So it was also the data from NVIDIA, so that's the other reason why I want it. But again, just the hourly close will confirm we're going to it. And yeah. Damn, Amor, you're awake? That's crazy. And if we do get a close below here, technically the play would be this. It would be like, which is about a 1-to-1, and then you'd go to lower time frame and you'd look for a lower time frame setup. But yeah, I'm not gonna be going over this. I'm not gonna even trade this. I'm not trading today, but all right, let's get on with the little video.
Today, I'm going to be telling you how to fight smarter in Fortnite. I'll be breaking down some arena fights to give you tricks to debate.
So I think I'm gonna watch 2 videos. Okay, so there is here. So there's this one, this one, this one. I'll probably just watch AMD and standard deviations, and then this one as well. All right, this is gonna be the first one. I'll keep like checking on the market. Just I want to see in 25 minutes if we can close below this. I'll say something, but again, this is study session, not live trading, so. All right, tell me if you guys can hear this. Wait, not yet. Can you all hear that? All right. Cool. So again, I'm gonna watch the video and then we're gonna see if we can put it in the practice and look for some examples. Also, I'll pause it a little. I'll pause it just to like clarify some things if I notice something that I see.
How's it going, everyone? This video is going to be over standard deviation projections. Standard deviation projections can be used to find targets, areas to expect retracements or reversals, as well as a confluence to an existing strategy. This video will be focused on the settings of the Fibonacci, which price leg to project, which areas to look for a retracement or reversal, what to expect after hitting max expansion, as well as pairing with PD arrays and overlapping existing projections. So let's get into it. So the first thing we are going to go over are the fib settings. So if you see here, we are using a fib retracement tool on TradingView. And the settings we have here are 1, 0, -1, -2, -2.5, and -4.
All right, I'm gonna put these up, bro. So 0, 1, the use 0, 1, -1. -2, -2.5. Make sure you guys are copying this too as well if you want to your own. And then -4. All right, cool.
And if you specifically want to see the color I'm using, it is right here. And
Turn up your volume. Turn up my name then. Right click my name and then just turn my volume up. If you have no sound, then it's probably something wrong on your end.
my background is very transparent. I have my values on the left side in the middle with a font size of 10. So now that we have our settings, let's get into how to anchor this Fibonacci retracement tool. So here's an example of what the Fibonacci tool will look like once it is projected out. However, where do I anchor this Fibonacci tool to get these projections? And that is what we are going to go over next. So when price creates a smart money reversal or a reversal pattern, so for example here, price is trending up, makes a high, low, higher high, lower low, I'm going to look for the manipulation leg. And that manipulation leg is the swing that swept.
Alright, so it looks like you're just drawing it off. I already kind of knew this, but I mean, it's kind of clarifying it. But again, it just looks like it's going to be the low that makes the high, and then when we break that low and get the short, that's your projection.
Liquidity before changing the state of delivery or shifting structure. So for example here, this low to this high that swept the liquidity, that will be the manipulation leg. I then take my projection tool or my Fibonacci retracement tool and project this out such as so. So let's get into the charts and look at a few examples of projecting these out before we get into the rest of the PDF. So here we have price action trending up. Let's see if we get a smart money reversal.
Alright, so right there, I think. So you got, so I like to test myself, like before he even does it, but you can see we get a high or higher low or low here, higher low here, higher low here, higher low here, higher low here. So you can't project anything. Higher low here. And then we get a higher high, and then it looks like we're gonna break the higher low right here. So you would do it off of this last leg before you make this. Let me see.
And here you
You should be able to see my screen. This looks like it's a 60-minute time frame. So it should be off of this leg because this is the one with. You can see the video, but not. What do you mean? Oh, I get what you're saying. Okay, so like where his yellow. Okay, it's where his yellow thing is. See that leg where we make the higher low and higher high that we break? That's the leg you should do it on. I think.
can see we get
Alright.
an aggressive price action out and then back into the range if you've seen my last video on accumulation, manipulation, and distribution. So where is the price leg that made the new high before the new low? And so from this low to this high, that would be the manipulation leg. And so projecting that out from our high to our low, you can see we get our projection put on the screen here. So let's go to a few more examples of just projecting this out. So here we have price kind of consolidating. Let's see what happens.
So here we're looking for a market structure shift. And here's what I'm gonna say before I even like go further than this. For me personally, because I'm not like a market structure shift trader kind of guy, I think I'd do it like I don't even know. Like I'd probably do it after it works and then I'd project it. Because then I'd probably look for an inversion after. Like I'd probably do it after the first market structure shift works of the 2022 model. If I'm not already in. So I'll show you an example later, but
So we get
alright. Oops. So there it was.
low. From this low, get a delivery, projecting that out from our high to see what happens to the new high.
Okay, so
So from right here at this high to this low, that would
see
be
how he's kind of doing it early. Like to me, I wouldn't do that. I would because I feel like a lot of those can fail. Especially like looking at the order flow in general, you can tell that he's using a lot of hindsight examples here. Like he's picking a bunch of examples that work. I guarantee you this right here fails more than not. So to me, like I'd probably wait for like another leg and then project it out and then look for like an inversion.
leg. So projecting that from our low to our high, we have our projection. So here we are, we have price trending up. And there we go, we get a sweep and then displacement down. So take a moment, where is this manipulation leg? So you can see price from this low made a new high before displacing down. So our manipulation leg is from this high to this low, or from this low to this high. So then projecting it out, I go from this high to this low and have my projection. So now that we have practiced identifying that manipulation leg and projecting it out, let's go back to the PDF and see what we are looking for in these projections. So here we are back in the PDF, and although there are many ways to use these projections, we're going to focus on the -2 to -2.5 and the -4 as areas of interest. So when price reaches the -2 to -2.5 standard deviations, I'm looking for either a retracement or a reversal from this area. If price displaces and closes through this area, then I'm looking for the max expansion or the -4 standard deviation. Once hitting max expansion, what I can do is mark out a discount and premium of this leg here and look for price to retrace to an equilibrium. The next thing I want to talk about is pairing these standard
All right, so when price does do a max expansion, which this is more hindsight for me, and we see that it hits a -4, then we look for a retrace back to the 0.5. Definitely something new I didn't know.
deviations with PD arrays. For example, here the -1 has a fair value gap lining up with it, and then the -2 to -2.5 has sell side liquidity resting between them. I personally love to use these projections and then see if it lines up with equal highs or a fair value gap or some sort of PD array. So let's go back into the charts and look over these concepts. So here we are back with our first example. Let's go ahead and mark out these areas and then look to see if any PD arrays line up with them. So marking out the 2 to 2.5 standard deviations, as well as the 4th standard deviation, let's see if any PD arrays line up in these areas. So if you notice, we have sell side liquidity resting here, as well as here. Because this is just right above the -2 to 2.5 standard deviations, I consider this the low-hanging fruit. Then we can mark out the sell-side liquidity resting within this area here. So let's see how this plays out. And another thing you can do is when we get another manipulation leg, such as here, we can also project that out as well and get matching confluences. So you can see how the -1 here overlaps with the -2 to -2.5.
Yeah, I don't know if I like that because it's like you could do that with so many legs. I don't know. This is why I never bothered to study standard deviations. I feel like this is still liquidity no matter what. No matter, like, you could have a -0.69 here and it'd still work, if that makes sense. But hey, I mean, it's fine, I guess.
And
Like, you could even do it right here as well. He probably's not even in this trade. He's probably just doing it. Yeah, he's not in this trade. There's no way. This is just for like targets. Like, I don't think he's actually entering the trade. But I think he has this in mind. And then, like, let's say we hit the zone during a New York Open, then you'd be bullish off the zone probably.
the -2 to -2.5 here overlaps with the -4 standard deviations.
Yeah,
So
I got Dean. I'm just using this to have like an extra toolkit.
let's go ahead and continue these out and see what happens. So you can see we hit this low-hanging fruit and then get a little retracement. And here you can see we don't quite take those lows, but we do reach into the middle of this area. And now, if you've noticed, we are into our second example as we have a manipulation leg here. And so let's go ahead and project that out. And so now, if we are looking, what do we see? Well, we see we have a -2 to -2.5 here.
The only thing useful for me so far is if we hit the -4, look for a retracement back to 0.50 the range, to be honest.
Ahead and mark that out. And then we have our -4 right there. Are there any PD arrays that line up in here? Well, we do have this order block here. If we mark out the mean threshold of that, it'll be right around the 2nd standard deviation. We went ahead and marked that out. And then we have all these equal highs resting above here with the 4th standard deviation. So let's go ahead and mark those out as well. So let's let this play out.
I guess this would be good for like a trailing stop if you saw something like this. Like if you're trailing your stop and you saw this and let's say you already scaled most, like at this liquidity right here, and we don't hit this and you see we bounce off a standard deviation, then you just sell if we get that manipulation and mark, or you'd cover the rest. So you can see
And there we go.
the negative 2.5, negative 2 area just dump, and then we go back up. So now that we hit a negative 0.4, I think he'd look for retracement back to the 0.50, which would be around here, which would be around the middle, if I had to guess.
We reach into that 4th standard deviation. So let's clean up the chart a little bit here. So letting this continue to play out.
See, that doesn't go back to 0.50, does it? I think it gets close, but
And there you see we get to our 3rd example. So let's go ahead and mark out this manipulation leg once again and project it out. Let's see what happens here. You can see we hit our -1 standard deviation and currently getting a retracement. Let's see if we reach into the -2 to -2.5 or the 4th standard deviation, and do we have any PD arrays lining up with those? Well, looking left, we have a fair value gap right here, so we can go ahead and mark that out. And generally with a fair value gap like this, I'd be looking for the near side here as we have equal lows. But we can also mark out the consequent encroachment of this. And then the next thing, looking left, our 4th standard deviation lines up pretty closely with these lows right here. So those would be my 2 objectives for this market maker sell model. So here you can see we reach into the -2 to -2.5 standard deviations. We get a retracement here.
okay, so
And
there's
then
the
finally we
0.4.
come down and hit our 4th standard deviation here.
So let's see if we retrace 50% of the range here.
Below this low. So let's go ahead and zoom out here and see how this all worked out. And you can see we still have some projections down here. So let's skip ahead and see if price ever reaches those lows.
Yeah, we never even go to 0.50 the range.
And you can see here, price does sweep those lows, but we still have this 4th standard deviation, which is aligned with our 2 to 2.5 right in this area. And there we go. And if you notice, we have another manipulation leg here.
Bro, this is so dumb.
And you can see we hit into our 2 to 2.5 standard deviations there. Now price is starting to trend up. Looking where is our manipulation leg? Right here. So I can project this out.
I'm
We have our 2
gonna
to
draw this on
2.5.
my next chart on Twitter just to look cool. Even though I probably won't even use it, but
Right here.
yeah, I know.
And now we are
These always work out on YouTube, and then when you go to the line chart, they all fail. Well,
in that 2 to
I'll
2.5
show you guys how I use them better though.
standard deviations. So sorry for the little bit of a mess here. Let me clean this up. So I hope in this example you saw that I can project manipulation legs out to give me targets. Using PD arrays, I can add to those targets. And then using multiple projections, I can add to the confluence. For example, when the -4 from one projection lines up with the -2 to -2.5 of another projection. So let's take a look at one example of this going top down and how you can use it on multiple different time frames as well. So here we are on NQ daily chart. And if you can see, price retch up into this daily fair value gap on a Tuesday, made a reversal, and then the next day expanded lower and displaced below these lows. Anticipating a classic sell week with a Tuesday high, I'm anticipating Thursday to continue lower. So with that idea in mind, let's go ahead and drop down to the hourly chart. So here we are on the hourly chart, and this is the daily fair value gap.
See,
here.
what I'd
Where
probably
is the
do is I'd draw, you can see the manipulation like there very clearly. I'd probably draw it there and then mark the -4 after, like after we see the half of it play out.
manipulation on this time frame into that daily fair value gap? Well, here is the high into that fair value gap. Where is this swing or the low that made that high? Right here. So from here to here, that is our manipulation. So projecting that out from high to low.
Yeah, that's what I do,
Let's
exactly.
go ahead and zoom out here. So marking out Thursday, right here to right here, we could anticipate price reaching into the 2 to 2.5 standard deviations right here. And another thing you can do is mark out the consequent encroachment of these standard deviations. So if we're anticipating price to move lower into this area, let's drop down to a lower time frame and see what happens. So down here on the 15-minute chart, we'll go ahead and get into London session. We're going to go ahead and mark out our midnight open here. And let's see what happens. You can see Asia consolidation. London moves aggressively lower and then back into the range. Accumulation, manipulation. So anticipating distribution. What do we have over here on the left side that is interesting? Well, we have equal highs resting here. So let's see what happens here. You can see we just sweep a low here, continue higher, and there we reach into those equal highs. Now, since London is retracing in terms of the weekly profile, I'm anticipating New York to move lower into this 2 to 2.5 standard deviation area. So let's drop down to a 5-minute chart. So as we near New York open, let's see what happens. And here on New York, you can see we get a big wick up and wick down. So let's drop down to a lower time frame to see what that looks like. So down here on the 2-minute, nothing really interesting towards the downside yet, but I am going to mark out this order block here and see if it forms. So here we get displacement below this order block and this wick here. So looking at this price action here, where is our manipulation?
I wonder if this is gonna work or not. Whoo.
So you can see this is the leg that made the new high, and where is the low of that leg? Right there. So that is our manipulation. So projecting that out from our high to our low, there we have our projection. Now, the next thing we want to look for is, do we have any PD arrays lining up with those projections? So looking left, what do we have resting just above -2 standard deviation? We have our London low.
The
So
candle, the live candle we see right now, that's a candle I'd be interested. I want to be interested in those tiny ass market structure shifts. Like the candle we see right now, I'd probably draw it for those. Because it's a much bigger, it's very clear we're getting a market structure share there, so this makes sense to me.
that would ideally be the target for this, as it is a low-hanging fruit. Let's zoom back in here and see if we can find an entry. Now, the first entry I would be looking for is a retest of this order block here, with my stop on this high, and then I'd be looking to target those London lows. So let's see if that takes me in. It does, and we start to get our distribution lower. And you can see we leave equal lows here, and we start to get a retracement.
So here's the new there's the new manipulation leg. So why isn't he drawing the projections back to the upside here? See, this is when I'd probably stop myself out of runners.
These other up close candles here. Let's see if those provide a reaction. It does.
Oh yeah.
And
so
then we go.
So why doesn't he draw standard deviation back to the high? Maybe because we didn't hit the -2. I guess that makes sense. But
and we hit our London lows. So just to review what happened here, we have a classic sell week. So anticipating expansion into Thursday, we drop down to the hourly chart. We find the manipulation on the hourly chart and project it out, which gives us our overall target of this yellow box here, which let's see if that hits. And it does reach into there, and the consequent encroachment of that. Now, the next thing I did was drop down into the lower time frame, look at the daily profile, and then find an entry targeting those London lows. Now, I hope you found this video helpful. If you did, please like and subscribe. I am planning on my next video combining my previous video with this video, so an accumulation, manipulation, and distribution combined with standard deviations. If that is something that interests you, please let me know in the comment section below. And other than that, I'll see you guys next week. Have a great one.
thanks, man. You too. What a nice guy. All right. So now we're going to the chart. Let's check the market. Are we gonna get a? So it looks like we're not gonna get our change of delivery here. So not bearish, unfortunately, as much as I want to be. Again, the only way I'm interested in this low is if we get a close underneath there. It doesn't look like we are. Let's see. So standard deviation wise. So on the 15-minute, well, live market wise, there's a 15-minute version here, so maybe I'll look for like a lower time for short setup there. But anyways, standard deviation wise, it doesn't look like there's a manipulation lag here because we get see how we get a low here. Why is my keyboard not working? Oh, there we go. All right. See how we get a, so here would be the manipulation lag. However, is there ever a market structure shift over this? No. So this can't be the manipulation leg anymore. Okay. Now, if we look at this, do we get a manipulation leg here? No. So even though this is a market structure shift, there's no manipulation leg here, so you couldn't do it. Let's see if there's one like the one. No manipulation leg there. No, yeah, there's not. I mean, technically, maybe this would be one. So maybe like this would be one. Oop, up at London the Open. Oh, right here. So we get our path. We get our down move, and then you get this manipulation leg. But we would need to break this high, so you technically don't get it. So I want to consider that. So see how, look, we'd have to break that high for this to be the manipulation leg. I think this would be one right here. Like that looks like one right here. So we draw it on this because so I want to take my fibs. And we're gonna project them out. Did he? So is there a Does anyone actually? There's. I don't think. No, there's not a significance of the -1. Um. Uh. Not real. No, I wouldn't say. I wouldn't say it is, John. Yes, Scotty. An Apex challenge and the 90% off sale is literally like $15, so I would get both. Trading view is gonna be way more expensive. All right, so it looks like there's no significance of the -1, I don't think. But he did say, didn't they line up at one point? Like, oh yeah, 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 that is one. All right, I'll mark that out in a second. All right, where does he say like they line up? Does he say that so I guess he does say the -1 matters.
Manipulation, we take those lows, but we do reach into the middle of this area, and now tracement. -4 standard deviations. So let's go ahead and continue these out and see what happens.
Wait a minute, it's a -1. Okay, so it's a -1, so it does matter. All right, cool. So if we also go to sure what time frame that's on. Right here is a manipulation leg. And then this is where you'd expect to retrace back to 50% of the range. Let's see if we can get them in here. He never really mentioned this at all, but this would be it. Yeah, standard deviations down to -4, and then this is where you would expect the retracement into the range. Uh, so that's a really nice sample. Now, here's what I'm unsure about. Would it be the 50% of this range from the start from the 1 to the -4? Like, would it be from here to this below? That's what I'm confused about. Okay, because, I mean, that would be hitting the, that would be hitting the 0.5, you can see. Alright, so that's that. The entry for this, if you didn't enter here, you're just bad at trading. You should have entered right there. Does everyone understand why that's a good entry? Does everyone understand? Yes or no? Yeah. Yeah, I don't understand either. Yeah, this is more of a hindsight thing. I just want to see what you guys would say. Yeah, there's not really good. This is just this is just a you pray price doesn't go back to this one instead kind of entry. I would not have entered this, and there's no break. Yeah, I don't want to run to that. It's just a random favorite I got that works in hindsight. I mean, maybe there's some sort of inversion favorite I gap in the higher time frame right here that I don't know about. Then it would have an entry, but as of here, I really can't see anything. Now, you could have entered this maybe. Does everyone understand this entry? Right here? Yeah, see, this one makes more sense. This one is just like a random fair value gap that kind of works. So this one, you got an inversion model, makes more sense for an entry, in my opinion. Um, all right. So, I mean, the entry would have been there, in my opinion, but you wouldn't have known it was a manipulation leg. So you would enter there, and then after, um, you would have done your standard deviation projections. Okay, so let's look for another one. Again, I do like how there is decent low resistance liquidity here, so it does give me a little more confidence this will dump. Levi's probably it along here if I had to guess, and he's gonna be our liquidity for the day. So, where's that? Not a long entry I take, just because we have low resistance liquidity here. We kind of took this high. We're kind of still delivering from a inversion up here, so and I want to be bearish anyways. All right. So let's see if there's okay. Here's a manipulation like here. We get a low, and then we take out this high. So here would be another example. And now this would be your first target. And this actually does line up with a fair value gap, so this would probably be your scale spot. See, I wouldn't have enough conviction yet until I see it more. Like, I wouldn't have conviction we're going to go to here yet. I mean, just because it's a standard deviation, but I guess it would be a scale spot. And then like, here's a situation. Wow, this lines up perfectly. Look at this. Okay, this is what I like. Right here. Now I just need the screen time to know this is going to hit. Lines up perfectly. So that's another confluence. So that's why I'm learning this, because maybe it'll be like another. I'm not going to use it that much, but it's like bad. So we have that. So like again, right here, I want to see us just. All right. T, I have a question. You don't have to stay in here for long, but you mentioned in your video that the negative 0.4 or the negative 4 thing. So if we look at, so there's a great example from London. I forgot what time. Oh, right here. Okay, so you got your manipulation like here. So this is what I'm wondering. So you got your manipulation like here. Okay, this happened during London, right? You took this high, got your manipulation like, got your market structure shift. Now we bounced perfectly at the 0.4. So this is a great example to post to Twitter. Probably will get a lot of likes, but you said whenever we hit the -4, we have to retrace into the, like, you don't have to, but if there's a confluence, it makes sense. That, and I've seen fair value guys say this too, that you retrace to the 50% range. Is the 50% range from this high to this low, or is it like a new dealing range we form along the way? Like, could it be? Okay, so it's all right. So where the hell? So it's here. This is the dealing range right there. It's not like you don't change. It's not like here to here. Okay, perfect. That's all we need to know. All right, cool. Thanks, buddy. Appreciate it. All right, so I guess so it's gonna be that dealing range. And for me, like personally, I wouldn't just long just because we hit the -0.4 or the -4. I'd probably just look for another model to get us back up to that 0.5 or wherever it was sitting at, because I'm not gonna just long off the -4. I mean, supers maybe might, but to me that'd just be not my model. I obviously need more screen time to do that, but yeah. All right. Let's look for another one here. Oh, this, I bet you there's one right here. Ooh, so there's actually not one right here. So see how we don't get the manipulation like here? See how like this would have been perfect, but this doesn't end up hitting the high. So this is, looks like a mitigation block, but yeah, we never actually end up hitting the high there. So here's wait, well, we form a high, low. We don't get a manipulation like here either. Yeah, we do not get a manipulation like there. And we don't get one here either. All right. 345 to 430. On what time frame? All right, let's see if this hits a -1. This will be interesting. This is technically. Ooh, so it does not. Okay. We kind of get a manipulation like there, but then that doesn't. Right here. Oh, right here. Oh, wow. Well, okay. That's perfect. So we got the manipulation leg there because we hit this low and then formed a new high. All right. So that actually tapped in the cent. That's actually cool. Let's see if it was to the cent. Cent. All right. It wasn't to the cent, but still pretty cool. All right. Now I'm going to go in the FxReplay probably and see a few examples. All right. By the way, the candle closes, so I'm actually gonna. The hourly candle could still close beneath, which is what we want, to be honest. Oh, there's still 45 minutes to the close. Never mind. Yeah, it's just still a lot of time. So what could happen is we could hit this low and close beneath at the same time. Open will be very interesting. So I'm gonna actually have this drawn out because it's like a live example right now. And you can see this does line up as well with the -2. So I don't know. Maybe I will start using these more. All right. I wonder if like the bias is actually bullish here. This would be a good long maybe because it's a fair value gap lines up with standard deviation. I mean, it might not be bad. All right. So all right, what's the bias here? So how would I find the bias here? So to me, the bias definitely does look. I don't even know, to be honest. I mean, I was gonna say short because we're inside this, but we did hit this low, so we don't really need to go back down to these lows if that makes sense. So I guess what I'll do is I'll look for like a lower time frame projection or lower time frame market structure here, or a manipulation leg or something like that. So it looks like we. I mean, it kind of looks like we have one here. For the 15 minute. No manipulation like there. Yeah, I don't really know. Don't have any good ones. I mean, I guess. Yeah, no, I don't like any. Okay. I'll just draw it out. I was gonna say this one right here. So I was gonna say that one. So that would be your manipulation leg. Draw from here to here. I'll read your message in a second, Mike. Negative. All right. So let's see. So this does line up with liquidity right here. So my guess is like if I were trying to get on a short, I would still maybe be confident here if that makes sense because we'd be going into here. So let's see if it works. And boom. Let's see what happens at the 0.4. We don't even hit the 0.4. Let's see if we do. Here, here's what I'll try doing. This probably won't work, but I'll go for like a 1-to-1 down here, maybe. All right, let's see. Or what you could do is you could look for a confirmation long off of this. Uh-oh. About to fill us. And yeah, it doesn't even fill us. Maybe it would have worked. So Mike said 1 to negative 1.5 is typically a good entry point, and where we will find a fair value gap. 2 to negative 2.5 is typically either a retracement or a reversal point. All right, what do you mean by that? Do you mean if you're looking for the opposite way? Like if you're trying to long, all right. If you're trying to long, you're trying to long like the -1. What's up?
Hey.
What's up? How's it going, Mike?
So, yeah, so typically what Dexter does, who's like the master at this stuff, is he'll use the 4-hour candles,
Yeah.
right? So
What if all right,
he'll
what if this is so pretend this is the 4-hour.
right. So in that case you would use typically you would use the manipulation leg coming into the high,
Yep.
right? So this doesn't really work awesome in tight consolidations like this, like really tight price action.
Yeah, I get that.
But in this case, I would take the high, and then I would project down from the high to the last significant swing,
Right here.
right?
So
Which
here
would
to
be
here,
there,
probably. Yeah.
there to there, right? Yeah.
Yeah.
So you still have to have a bias, right?
Yeah.
Long, short, right?
And
It's
it
pretty simple.
would probably be short here because just we're inside the 4-hour fair value gap.
Yeah. So you project down to there, and then between 1 to 1.5 is typically where Dexter looks for his entry.
Okay.
That will usually be in some sort of inefficiency, right? Like a fair value gap,
Yeah.
something like that.
Looks like it's
Volume
not.
imbalance, whatever. And then he'll ride it until 2 to 2.5, where typically there is some sort of reversal or retracement at that point. Right?
Okay.
The market just gets tired of moving in one direction. It reverses. The rule is that if it bodies over 2.5, you are typically going to 4.0
Okay.
at that point.
So at this, you don't really get an entry at the -1.5 or -1. We kind of just go through it, then hit this, then retrace.
That is your entry.
Right here.
Yeah.
Okay.
Yeah. I mean, it came to 2.0, right?
Yeah. Well, this would have been for me. Like I would have seen. Okay. We held the -2 2.5. We have this inversion. I'm longing this inversion.
Yeah. Yeah. That would be essentially a long. Absolutely.
Okay.
Right. You came anywhere from 2 to 2.5. It's a zone, right? Just like everything. Nothing's exact. But,
Yeah.
when you get there, you can expect you basically start looking for reactions to see whether you can go long at that point.
Okay, that makes sense. All right. Cool. Thanks.
Yep. No problem, dude.
All right, so let's do it on the 4-hour and see what we can see. Okay, so this would be our manipulation leg. The 4-hour. All right, the last thing, Mike, does he care about body close for the manipulation leg? Does the body close
No.
have to? Okay, so if we wick
No,
below, that's a
well,
market structure
but
shift.
he's typically when he talks about the 4-hour candle, he's so for the general day, he's projecting not only the 2 a.m. candle, but the 6 a.m. candle as well. And that is based on, he's typically using a 5-minute chart, right?
Yeah.
You come into, you look for the last significant swing before the 2 a.m. You look for the last significant swing before the 6 a.m. You project both of those in the direction you think the market is going. And then you look for confluence between them.
Okay.
Right?
Yeah.
So, and then the 6 to 10 a.m. candle will essentially project what you're going to do the rest of the day.
Yeah, that makes
Right.
sense.
It's a little tricky, this thing, right? But
Yeah.
it does, dude, every day, dude, the guy kills it every day when I'm in his room, and
Good.
he does an amazing job with it. You know, capture these huge swings, but it's absolutely a different style of trading than what you do,
Yeah,
which is also awesome too, right? You know,
yeah.
I think this is a great way. I like to use both combined. That this gives you, kind of lets you know like when to keep pressing, when to stop pressing in a direction,
Yeah, that makes
right?
sense.
Yeah.
All right.
What are we just talking about?
Standard deviations.
Gotcha.
All right, so here, let's see when we get to this negative 2.5 zone, it lines up with this. Let's see if we get a setup inside of it. No. So like, Mike, would this count? Like, even though we don't technically tap it? Maybe I drew it wrong. I definitely do this right.
Yeah. No, that,
Yeah,
I mean, you know, like I said, it's not perfect, right?
yeah. See if it even gave a setup there.
I mean, he would sit there and typically go, look, that's a breaker block too, right? So he's
Yeah.
not just doing this, he's doing the whole ICT thing.
Yeah,
right?
yeah. Okay, well, that's not it. They're never even gave a setup, so. Okay, so that wasn't ever set up. See if we get a manipulation like here. Okay, I guess this would be one. But what I would do is I'm not longing this. It just looks like one that I look for a reaction up there. Why isn't this playing?
By the way, Mike, who were we talking about regarding very good usage of standard deviation?
Dexter. I follow him on Twitter.
Okay, I'll take a look at this.
Dude, what is happening? Yeah, so it doesn't ever give us the entry there. Or it doesn't ever go into that zone. Alright, here's so we hit this low. If we take out this high, this would now be the manipulation leg. Okay, so we never did. I wonder, is there another manipulation leg here? Yeah, there probably, yeah. So like Mike, in this example, would you do it from this low to this high or this low to this high?
What? Okay, so what time?
From here,
so
here.
that's 1300.
This is 3 o'clock.
That's 3 o'clock.
I mean, to me, it makes more sense to do this one right here, but because it's the low that made the high.
Yeah, typically.
All right, and yeah, you hit the negative 2.5. You probably got a smaller time frame long here. Yeah, I mean,
Yeah, right there. Fair value gap, right? Perfect.
yeah, yep. And then this would have been an inversion right here. Body respects it, then body closes above, and just, yeah, so that's nice. Wish I just would have seen that earlier, so I could have taken a play base off of it. All right, manipulation leg again. So okay, it's a manipulation leg because we take out this low, and then break this high. So I'm just gonna look for a reaction off up here, the zone. Damn, it's not giving it. Just trying to catch one live trade, please. Already played out. Let's look at the daily. So here's our manipulation leg for the daily. Yeah, we already kind of got the reaction. So, all right, so the body holds at 0.25 here, negative 2.5 here. Interesting. And boom, thanks. There's Levi just gave us a ton of liquidity there, guys. Let's go. Is Levi in here? I'm just kidding. I'm just kidding. So this low should be hit. Boom. And then here's the 2.5. So maybe a 30-second long off this would work, or 15-second. Let's see if we get it. But I still think I still think the bias is down here. Like, this is still my bias here. So I wouldn't look for long here, I guess. But like, let's say the bias was bullish, I guess you would. So we should get this low. Bro, I was like, all yesterday, everyone was like, oh, bias is long, bias is long. And I was like, no, it's not. Bias is short. I was just fading everyone, bro. Dude, like,
Yo,
yo, what's up, Levi? Levi, how's
yo,
your?
what's up?
Let's see your executions today.
I haven't traded today.
Okay, are you sure?
I swear to God, I think ask people in the chat. I did say I was not trading till
All right,
9:30.
all
I didn't
right,
go long on that shit. That shit was obvious. That shit was not gonna work.
bro. That shit was obvious. Sell side
It, yeah,
is
the
gonna hit.
sell side. That's good. That's good. That's good for sell side. I'm with it.
Boom. All
But
right,
Yeah,
but
we
let's
just hit south like so.
go.
but
Let's
I
see
can see
if
this
we get
manipulation.
Judas.
You know what I'm saying? This could be a
Yeah.
whole Judas right
Here's
now.
yo,
Let's
guys. Here's the -4. So here's a -4. Okay. So we're gonna look for we're tracing it to back to the 50% of the range here. We're gonna apply what we just learned. This is better than FxReplay because this is a live example, and we're gonna look for a 30-second setup here. Okay. And we should go back to this 0.5 of the range because we just hit this 0.4 and we just hit sell side. So let's see if we get a 30-second setup here. Why am I not trading today? Not any reason. I mean, just I don't know. I'm just not. All right, this is our 30-second long here. This should work. I'll set a limit.
This is the beauty about ICT. You can make the money both sides of the market. Yo,
And
shit.
let's see. Damn it. So it
Shit.
hit the 0.50 of the range before. Wow, that is beautiful. Like, you could have just souped that knowing that.
That was PM low right there. To yesterday. Thank you, contract. Oh yeah. That's a motherfucking Judas swing for real.
Yeah, that it is.
That's a motherfucking Judas swing. Nah, I definitely saw those cells like getting hit today.
Bro, why
Especially.
didn't I soup that?
Oh yeah.
No
It's okay.
way.
It's okay. It's okay.
I wasn't prepared to soup it. I took a trade in overnight that got me all
Alright.
plus.
Dude. Oh, dude, why? Okay, this isn't getting me that trade.
Jesus Christ.
I guess
What is this?
long this is inverse, but we'll probably already hit the high.
I'm like targeting the buy side from yesterday. But I'm not in yet. I want to see that news hit. Was the news like is it major? Because that's something you could trade through. PMI, fuck that. Fuck that. It's like PMI. Well, I think 16078 is like the draw on liquidity right now. What do you think? It's wild.
All right, this is the pickle model. We long here, and we sell right here. Actually, I'm not doing that. But you get the point. Yeah, we should hit this high. Again, I'm not trading today. I'm just doing this. All right, back to FxReplay. And this is just stopped again.
You're not trading today?
No. I'm waiting until Monday.
That's good.
Yeah, so that's actually a really good example because we saw what we learned, we applied what we learned, we saw this is -4, we saw a sell side, so it made sense to bounce in there.
It's incredibly smart. I don't trust this, man.
I really don't want to act yet. That's way too quick. I wasn't prepared to long yet.
I think there could be another opportunity to long. The only thing I'm just scared about is this news. Like I would want to go long to that buy side. It's just the news. And I don't know if it's one of those news that could help you trade or just run those stops one more time. But I would want to go long around this time right now. But I'll wait.
I mean,
Just
it
'cause
would
yeah.
make sense for this to work for long, I guess.
Yeah, this the long I was in chat. I was like talking about buy side I was looking for. But I don't trust it without the news. You get me? Like that's just the thing. Like I would, but sometimes it's just not worth it. Even though you think you know what you're doing, and then you're just gonna hold through the news because this trade's not gonna end before the news hits. What the chances that it just rockets when news hits and it doesn't like you know what I mean? I don't want to
Well,
stop it.
we did leave equal highs, so
Yeah,
Why isn't
I would go long exactly inside that Fibonacci gap right there. Yeah,
I long?
okay. It's just the news that just got me
Wait,
like thinking
why?
like,
Wait a minute. Why does it say that this is long here and I'm not in a position? Weird.
but this is
Maybe I was in an accidental short. That's weird. I'm not sure why that's. I should be in 2 contracts here. That's weird. Anyways, guys, I'm literally just gambling right now. I mean, yeah, I'm gambling. If you want to follow me, be my guest, but
don't say that.
it kind of looks
Oh yeah,
good.
you are.
I think the reason it looks good is because we have equal highs right here, I guess. But I mean, yeah, I'm just gambling. This is not even my model. I'm just kind of doing whatever. I'm not even supposed to be live trading right now. We'll see if it works. We'll put the stop loss way down here.
Where's your stop loss?
1604 16004.
No, that's crazy stop loss.
Bro, I told you I'm gambling. I don't know what's gonna happen. I'm not planning on trading today.
I say do it correctly though. Like just try.
I'm doing standard deviations. All right. All right. So our manipulation. So this is gonna be the last thing. I'm probably gonna go over, and then I'll probably get off. The manipulation leg would be here. We have to break this high though first. Why? Okay, this is keep stopping. I have no idea why.
I really want to go long, but
Do it, bro.
no, it's not
I'm
smart.
long,
Don't
bro.
tell me to
I'm
do
long,
it. Don't tell me to do it. It's
bro.
not smart.
I'm long right now. Long with me, bro.
Bro, no. I'm trying to like have a little clean record. Public. I'm trying to have a clean public record.
All right. So the actual long here, like the actual long would be if if we close below, then this broke. So here's the actual non-gambly model here. For anyone wondering, again, I probably won't trade it. I'll tape read it, but here's the non-gambling model right here, the 2 minute. So if we close back above this, I'll average up or average down or whatever where we are. But looks like this may fail, but this would be the non-gambling model for later. Maybe the news takes this out because we kind of got a bunch of equal highs here. So, I mean, would make sense. I bet you I could do this and it works. But obviously I'm not going to do that. I'll just put my stop there. We got 3 equal highs above there. So again, this would actually be good long in my opinion if we broke this. But yeah, I'm not trading today. I don't really care what happens. Did anyone take this long on a live account with me? Type 1 if you did. Don't lie. If you did, you're kicked out of my Discord. Because I would literally have no idea what's going to happen. I wasn't even supposed to be live streaming, and yeah. You're joking, Fussy V, right? There's no way. I know of you of all people would not have taken that. You took 30 second model. Again, I'm just here to vibe. I'm not even here to trade, man. I'm just... Yeah, I have no idea what's going to happen. I mean, I'm a little more interested in these equal highs. However, is there a model to get us up there yet? No, the model to get us up there would be a break of this 2 minute right here. By the way, if there is a close beneath this, this would be the change in state of delivery leading us back down to this low, as T-Trade talks about. So if the candle closes beneath this, we should go back to the low. Be something like this. Not a good risk reward, but you get the point. So candle close in 1 minute. This is probably something I wouldn't trust though, just because of these equal highs above, but it's still something I would tape read. See if we close below this. All right, Tyler. All right, buddy. Why not use the lower fair value on the 2 minute? What do you mean? All right, it doesn't look like the candle's going to close below, but could be. Let's see. There's still 35 seconds. There's a 5 minute order block there. Sheesh. Again, it's not a 5 minute order block though, because we already this took out this low, so I guess this wouldn't really be considered an order block if that makes sense. Because the low of the order block took out this low already. I don't know. All right. Wow, we just need one more live example of this. Yeah, there's something wrong with the site. I can't use this. Yeah, we're probably done with this for now. But did you guys learn something new about standard deviations today? That's all that matters. I like that example that like today we had, like that was just perfect. Like just hitting that. I should have just souped that. I should have cared. Yeah, I'll upload this video. So I'm gonna end the recording there. Thank you guys for watching, and yeah, peace.